Hello and welcome back to the TradeNeon software channel. My name is Simon Reichert. I'm part of the TradeNeon Academy team. And in this video, I want to analyze together with you the HG future, which is the copper future traded at the COMEX, and have a look in our futures analysis platform, Futures Insights, whether this market is currently fundamentally interesting and whether we can use it for potential trade. As always, before we dive in, the disclaimer that trading in derivatives or securities in general involves significant risk, and that this video shall not serve as investment advice and or intermediation according to the KWG. So with this out of the way, I would say let's start off as always with our dry powder indicators for our managed money side. And as always, we want to look for extreme positions in the market. In this case, we want to look for extreme positions when it comes to the long open interest, because what we have been seeing in the copper future for quite some time now is a long trend. And when it comes to the managed money side, we know that they act as trend traders. So in ongoing trends, they build up their open interest, in this case, their long open interest, because this is a long trend. So at some point when we see a historic extreme position, we simply have to ask ourselves if all of the institutions are already engaged, in this case, long engaged, which institution is supposed to buy even more long contracts. In this case, we can see that the current open interest is not at an absolute extreme position. We can, however, see that in comparison to the most recent past with this core cloud right here, is that we are at an above average positioning when it comes to the long open interest. What we can also see is that the short open interest is momentarily quite low in comparison to the relevant past. So that simply means once we see the long trend coming to an end and a short trend beginning to form, is that we have a lot of potential for short open contracts from the managed money side. And obviously, as soon as the managed money side begins to close or liquidate their long positions, that will also act as short momentum in the market. And also because the current positioning from the managed money side is not entirely clear, when we just look at the absolute raw numbers, we also have our OBOS indicator that relates this current positioning that we take from the COT report to other variables, including the current price, also in relation to the look-back period, which in this case is 1 year, and also the total open interest and the amount of involved market participants. We can see that this current positioning is still, even though we are not an extreme absolute position, still quite relevant for a potential short move, because we recently saw a short signal in the latest COT report with 97% intensity, which is quite relevant. Let's move over to our PMPUs, starting off with our dry powder indicators. And what we can say right off the bat is that they have to be seen in contrast to the managed money side. Because when it comes to this group, they are counter trend traders. So that simply means when they see the price as momentarily quite expensive, they build up their short open interest. And when they see the price as, well, relatively cheap, they build up their long open interest. So in this case, we can see that they buy copper in average quantities. However, they sell copper as much as never before. So this absolute extreme position that we have from our PMPU side when it comes to the short open interest is definitely interesting, fundamentally interesting for a potential short trade. And we can also validate this impression when we have a look at the OBOS graph, but it's not a big surprise that the OBOS indicator gives us a short signal based on the latest COT report with 93% strength, which is definitely relevant for a potential short trade. So as soon as we get a short setup in the chart, we can definitely have a look for potential short trades. Let us now move over to our open interest, and here we can see that the that the current open interest is definitely in average territory. However, what is quite interesting is that we recently got a higher high when it comes to the price that was not accompanied by a higher high in open interest. Rather, we got a lower high, which simply means that the current still ongoing long move is not really supported by open interest, which is a first indicator that the long trend might come to a halt and that we soon get lower prices. Let's also have a quick look at the flow cube. We can see that we recently got a strong short building, which is definitely something we want to see for a potential short trade. The week before we got a strong long building. Okay, the week before 1 week long liquidation, which simply means that existing long contracts were liquidated, so were being closed. And the week before we got a weak short building. So definitely the impression we get from this is that the dynamic is shifting towards the short side. What is also quite positive for a potential short trade is that we soon have a short season on our side, starting from the 6th of June until the 2nd of July, which is definitely positive for us because we know that in the majority of the last 10 years, the market fell during this time span. And last but not least, let's have a look at the term structure for the copper future. And we can immediately see that we are currently in a contango state, which simply means that the future contracts that are further into the future, so further to expire, become more pricey, as for example, storaging costs are being priced in. And this is our normal state. It could also be the other way around, that future contracts that are closer to expiry become more pricey, which is usually in times of supply shortages, because in that case, market participants want to buy this product or want to buy this underlying good as soon as possible, which is usually accompanied with a price rally for this specific good. And if we have a look at the term structure difference indicator, we can also see that we are currently receiving short signals, which simply means that the price relation between the front contract and the first few consecutive future contracts is not shifting towards a backwardation, which is obviously something we definitely want to look out for when we want to plan for an upcoming short trade. And certainly we also want to have a look at if we are currently in a short swing trade. So with that being said, we are again approaching the end of this video. I hope certainly this video was helpful for you and your own trading. As always, if you have any questions, recommendations, or any other things you want to tell us, please feel free to drop us a comment and we'll get back to you as soon as possible. So with that being said, thank you very much for watching and see you again next time.